Hi, this is James Shug with Westpac London's end of day report for Tuesday, March the 19th. Well, it's very much a Cyprus driven day today, again, with markets off sharply right across the continent. The issue is that there's still been no parliamentary vote on the bank deposit levy. That part of the bailout package, which is intended to raise about 6 billion euros on top of the 10 billion euros to come from Cyprus's bailout European partners. It doesn't look good because even President Anastasiades, a proponent of the deposit levy, has said on Swedish TV that he feels that the House is going to reject it because they feel and think it just isn't just and it's not in the interests of Cyprus. So when one of the main proponents of the measure is saying he doesn't think it's going to pass, it looks like this whole bailout package is going to have to be renegotiated. And there's a sense that there really is no plan B. There is talk of Cyprus actually exiting the euro. We've been here before, of course, with Greece. Remember the referendum issue back in November 2011. Something no doubt will be sorted, but markets are very nervous until that happens. On the data front today, we had the German ZEW analyst survey. It posted its fourth straight rise on the expectations measure, although the rise was minute compared to the 64 odd point gain in that index over the previous 3 months. It rose just 0.3 of a point. That survey actually cut off yesterday, Monday, and 13% of the results came in on that day. So, some of the respondents would have certainly been aware of the concerns about the Cypriot bailout. And also, of course, you've got the delayed Greek bailout tranche and the Italian politics probably weighing on that index as well. As I say, it still rose. It's at its highest in almost 3 years. You have to go back to just before the Greek bailout Mark 1 in the first half of 2010 to find a higher reading for the ZEW expectations series. The UK inflation figures accelerated from 2.7 to 2.8% per annum. That rise was due mainly to utility bills, but basically sterling depreciation, utility bills, administration charges like tuition fees that are imposed by the government. They're going to keep the inflation rate up around 3% for some time to come. In fact, the Bank of England's own forecasts don't see it back towards the target until the year after next at the earliest. In the US, we had housing starts. They rose 0.8% in February. The single family component was up 0.5%. We were looking at a gain, though, over the year of 31.5% in single family starts. Permits are running a 25% annual pace, so there may be some short-term downward risk for starts, given they've been running ahead of permits for a while, but the underlying story is one of a recovering housing market there, but still recovering from a very low base and not making much of a contribution to the broader economy at this stage. So they're the main data points to note today. As I say, Cyprus the big driver though. Heading into at the close, the FTSE in London down 0.25%, French market down 1.3%, the German market's down 0.8%, Spain off 2.2%, and the Italian market down 1.6%. And the Dow Jones is down around 0.3% at the moment in the US. It's at 14,411. So little old Cyprus, 1 million people, 0.2% of the population of Euroland, less than 0.5% of the economy of Euroland. Someone just pointed out it's the same GDP as Turkmenistan, in fact. But it's even impacting on the Dow on a day when the data in the US was actually pretty decent. Okay, so that's it for stock markets. On the commodity markets, we've got copper prices absolutely unchanged today. Gold's up 0.5% at $1,612 an ounce, and what was the other one I mentioned usually? Gold, copper, and oil. The oil price is down 1% today at $92.89 a barrel. The Aussie dollar's taken a bit of a hit too. It's at 1.037 against the US dollar. It was above 1.04 earlier on, but as the equity market sold off, as it looked like the vote wasn't going to happen in Cyprus, as this talk of Cypriot exit, which may be overdone, but as this talk was coming through, the Aussie dollar was slipping away, as were the markets. All right, that's it for today. We've got the Federal Reserve's two-day meeting ongoing at the moment, and the statement, new forecasts from the Fed members, and FOMC members, and the Bernanke press conference tomorrow afternoon, and so I'll be around to report on that. Okay, speak to you then.